Over the last month, we've seen some pretty dramatic changes from an interest rate perspective, with most banks lifting their 2, 3 and 5 year mortgage rates quite a bit. Interestingly, the 1 year and 6 month rates have stayed low. I'll get onto that in a bit, but the context for that, with the conflict in the Middle East, obviously petrol prices have risen almost $1, and we're all noticing that at the pumps. And what that's led to is an expectation that the Reserve Bank communicated at the latest official cash rate review that inflation would hit 4.2%. When your target's 2 to 3% or 1 to 3% with a midpoint of 2, 4.2% sounds terrible, right? But the Reserve Bank has signaled that they'll look through any short-term impacts but focus on whether inflation from petrol prices flows through the rest of the economy. In other words, are there second-round effects? The wholesale markets have already been sort of thinking that way and had priced in 3, 4, 5/4% interest rate rises over the next 15 months. And what the Reserve Bank confirmed at their OCR review recently was that interest rate rises were probably not unlikely, might be the way to describe it, but later in the year. So they signaled that interest rates aren't changing for now in terms of the OCR, but later in the year they may have to raise interest rates. So what we've seen from economists in the market is pretty well universally, they're all calling for interest rate rises starting later this year, as early as July potentially, maybe September, but with 3 or so interest rate rises highly likely in the OCR over the next sort of 6 to 9 months this year, and potentially even further. So wholesale markets today are pricing 1.5% of interest rate rises to 3.75% from 2.25% OCR. So what does all that mean for mortgage rates? Well, the thing is that wholesale markets price in anticipation of those OCR changes happening, even if they don't ultimately happen. So we've seen those longer term wholesale interest rates rise, and that's been passed through with things like the 2-year mortgage rate that got down as low as about 4.5%. That's now generally around about 5.1%. The 3-year rates are up nearer 5.5%. Hey, for context though, that's at least 2.5%, 3% lower than mortgage rates were, about 3 years ago at the peak when we saw interest rates well over 7%. Hey, so it's not all bad news. What I think we're in for is a period of interest rates sitting between about 4.5% and 5.5%. That's what the OCR, the wholesale markets, are pricing at the moment for in terms of wholesale rates, and those retail rates reflect those. The good news is that if you're prepared to take the risk of a shorter rate, you can still get a 4.5% 6-month rate, a 4.6% 1-year rate. As I said, the 2-year rates are up about 5.1%. So it's that trade-off between the certainty of a longer-term rate like 2-year or the price, I guess, of those shorter rates. Each circumstance is different, so do talk to an advisor. But even if you're taking one of those short rates, it's probably a good idea to have your payments set at a higher level, because we do think that interest rates are going to sort of hover in that 4.5% to 5.5% range. So you want to be, in a position to be able to afford, higher rates, even if you do take those shorter rates. As always, talk to an advisor. What are we seeing in the housing market itself? Well, many economists are now predicting house prices will be flat, in other words, no increase, to falling this year. So we've got some economists calling a 2% fall in house prices. Obviously, that's nothing like what we've seen over the last 3 or 4 years, where prices are sort of up to 25% below where they were at the peak. So, a relatively stable market, immigration's picking up, there's still plenty of house building going on. So, for first home buyers especially, what a golden time, not a lot of competition for the ideal house, lots of choice, interest rates in a pretty fair range at the moment. So if you can afford it, great time as a first home buyer. Turnover is quite low at the moment, lots of stock on the market. So, a sort of golden time to look around, find the right home for you, and speak to an advisor about the right interest rate structure for your mortgage.